Good morning, everyone, and welcome to the fifth episode of the HSBC SME Knowledge Series in association with our knowledge partner, CRISIL. Today's topic looks at one of India's biggest employers, the Indian IT and ITES sectors. Before we start today's session, I would like to just put up a few housekeeping rules. All attendee lines will be muted and video will be disabled during the session. The Q&A option on the menu bar at the bottom of your screens can be used to feed in your queries, whether you're on your phone or your PC. This option will remain active during the entire session. However, due to paucity of time, if we may not be able to take all your questions, we will revert to you post the session with answers for as many as possible. Please also note that this session is being recorded externally. I now like to introduce my first speaker for the day, Mr. Vaibhav Gupta, Senior VP and Head Business Banking for the South Region, HSBC India. Over to you, Vaibhav.
Thank you, Subhash, and good morning, everyone. I welcome you on behalf of all my colleagues in HSBC to this series, which we have in partnership with CRISIL. Today's topic is on India's ITES sector, and very interesting subject called digitally resilient. And this shows how important IT and ITES sector has been in playing a very important role in India's economy, especially in the current times. So the ITES sector has very significant contribution to economic growth of India, its role in providing employment, and its share of GDP have been on the rise for the last few years. As you all know, India is the world's largest sourcing destination for IT industry. This position has enabled major transformations in the Indian economy, which has changed India's place in the global market. And apart from being a hub for many innovation centers of global firms, which I'm sure some of you are representing, India also provides the most cost-effective IT solutions to the world. So therefore, with this background, we are pleased to conduct this session, Digital Resilient, India's IT and ITES sector. We have a very good line of speakers from both HSBC and CRISIL, and we therefore start the session by introducing our first speaker, Mr. Manoj Goyal, who's Managing Director, HSBC Global Market Corporate Services business. In this role, Manoj is responsible for managing the Forex sales, Forex flow sales, as well as the risk solutions piece for corporate clients. Manoj has been with HSBC Global Markets since 2005 and has always been part of the corporate sales business with roles spreading across FX sales and structured solutions. Prior to HSBC, Manoj had worked for a few years at other banks in India in a similar space after his MBA from IIM Calcutta. So over to you, Manoj.
Hi, thank you, Vaibhav, and very good morning to all our participants. On a rainy day from Mumbai, I think that has been the saving grace when you talk about economy. The monsoon at least have been good across the country. So maybe I will just spend 7-8 minutes. Given we have quite other speakers lined up, and Lil, can you move to the next slide, please? Yeah. So some of the the three main component which I thought I will talk about are one, of course, what's happening slightly on the macroeconomic front in the country. Then we thought, of course, one of the most important aspect when it comes to economy for you specifically will be the the currency, what's happening on currency, what's our outlook on that. And then I will touch upon another topic, which is a big fundamental change, in the onshore risk management piece, where we have a new set of hedging guidelines which actually are coming into play from 1st September. So I think it will be good time to spend a few minutes on on a broader level what is changing over there and what does it mean for you. So moving on to the first topic, which is the macroeconomy. I think all of us have been working the last 4 or 5 months from home or from partially from office, and the clear idea is what's happening on the economy. Where do we go from here? And I think it has been an evolving phase because the trajectory is so uncertain that it is very difficult to the usual models etc. fail when we talk of current state of economy. But one thing which is definitely has taken interest is, I would say, divergence between the financial market, or what we call as Wall Street, versus real estate, which is the real economy. And there have been clear two distinct phases over there. And if I look at the top bottom chart, when we look at when this whole thing started from March, the economy, I mean, the Sensex can be a good representation of what's happening in the financial market. The rest of the, the on-ground parameters were looking quite good at that point in time. If you look at the world economic growth, that was still looking good. Uh, all the other parameters were looking quite decent. If you look at the manufacturing PMI, services, other things, etc. But the financial market reacted much faster than the deterioration in the underlying economy. So we saw the Sensex crashing down, from 42,000 back to 26,000 kind of broad levels. We saw the financial market reacting, from the foreign portfolio investors. We saw the significant amount of outflow as we see in March 20. On the debt side, we have close to 58,000 crore of money taken out on debt, and equally larger money, 62,000 crore money taken out of equity. And clearly, if you look at the credit spread of top-notch corporates trading into the country, the on the bonds, the NABARD, which is nothing but anyway the sovereign risk, which moved from a credit spread of something like 70 basis point to upward of 250 basis point, or let's say for HDFC, where the credit 1 year credit spread would have been something like 120 basis point, which moved to 300 basis point around that time. So clearly, I think the global market reacted much more than what was happening on the street. But as gradually, things start, panning out, we saw, relatively things stabilizing on the financial market, and on the underlying economic forecast starting, worsening. And if you look at now currently all this financial parameter, when the number of cases are rising, the it's very clear, it's not a short-term phenomena. We are in it, COVID situation for quite a long time. People are talking about maybe, it very well last now this year, but even next year when things are going to move is quite uncertain. But financial markets continue to rise. I mean, the Sensex is very much close to pre-COVID levels. If you look at the foreign portfolio money, if you look at let's say last month or current month, I think the kind of money which has been flowing in equity markets has been very robust. And if you look at the spreads, they are back to where the earlier levels were. So I think the puzzle here is clearly the economic forecast is worsening, but it is the global liquidity which is fueling all this movement. We all have heard about the central bank actions across the globe. Of course, US Fed leading that pack. They have been the kind of money which is flowing in global market is what is causing all this move. From RBI perspective, it's always debatable what I think government of India has done, or what all measure they can do. But from RBI perspective, I think one thing they have quite maintained, they have been able to provide good macro stability. And maybe we can move to the next slide. And if you look at on this graph, it shows the RBI, first of all the rupee movement, and as we will see, relatively it has been quite stable. Of course, just in March, rupee did move from 71 to 75 levels. But since then it has been very stable. In fact, last couple of days we have seen good appreciation on rupee, and I will just touch upon on some of the levels. But from RBI perspective, I think they have ensured adequate liquidity in the market, which means the banks are surplus with funds. It's a different matter how much of that is flowing into the actual funding or actual credit growth. That is always debatable. But at least from RBI perspective, they have tried to maintain that. Now, quickly touching upon on currency. Clearly, I think the environment where we are right now, it's like it's raining dollars. I mean, when if you look at on the right on the right side bottom level, it shows the trade deficit for the country. Which generally used to be something like $15 billion before the situation started. Then as the oil price is coming down, which are the largest component, it has come down in leading to, in fact, in June, to a surplus environment. But even in July, it was close to $4 or $5 billion, way down than an average of $15 billion which we have seen last year. No doubt, I think oil prices has played a very, very big part over there. But there are other reasons also. While we have seen imports contracting, and in fact the capex import contracting, given the low expected GDP growth right now, but the exports have not contracted to that extent. And some of the heavy ticket item, oil is one, but even otherwise, such as your gold import or electronic import, have come down, which is leading to this situation. So while on the trade account side, we are short on dollars, it's positive. But on the current account, the invisibles, or some of the industry which you represent, touch wood, we haven't seen that kind of disruption in that sense. So invisible on software, on services exports continue to remain quite robust, leading to a decent bit of current account surplus situation. At the same time, I the capital account flow, we all have heard about what's happening on the geo investment, that continue to remain the kind of money which has come in over there, has also leading to significant number of surplus in the economy. uh, then we can ask why rupee is not appreciating. Clearly, I think if you look at the bottom left corner, shows the RBI reserve number. They continue to go higher and higher, and last number, close to 535 billion. And I would like to draw your attention to 2013, when we were like 267 billion. So that's the kind of accumulation of reserve we have seen, which points to suspected intervention from RBI. And it has been very, very steep in last 1 year. I mean, if you look at it's close to 80 billion kind of intervention, or the run up in the reserve which we have seen. So given this situation, I think dollar rupee clearly right now is dependent on what happens, to RBI, suspected intervention. Do they continue to intervene? If they continue to intervene, yes, I think rupee can remain here. Or if they let it go, and we have seen last couple of days, a bit of let go in that, which has led rupee to come down from 74 down, in fact 73.80 kind of levels. So from now on, I will say it's more of a stable, currency, with appreciation bias, unless something happens materially, globally. Can we move to the next slide, please? I think I would just like to touch upon maybe a few more minutes on the risk management framework. I'm sure some of you who use hedging to manage your currency risk. We have been a very, very regimented regime, in the sense that it was a very, very prescriptive regime from central bank, where you had to provide many stat auditor certificate, or self declarations, senior management undertakings, and a lot of debate about what kind of exposure is allowed to hedge, what is not hedge. I think all that is changing. RBI is moving from being prescriptive framework to something which is known as principle based format, where they are harmonizing the exposure, what can be hedged, what can't be hedged, and they are relying more on corporate governance. So they are coming around from exposure, it's only contracted exposure, and in case you don't have something firm at your end, it could be moved into anticipated exposure, and you can hedge that exposure as well. And in fact, if your outstanding hedge contracts are less than $10 million, then the government is the RBI has provided a lot of flexibility, where you may need not submit the underlying to the bank. So hedging and accessing hedging market is becoming much, much more easier. At the same time, I think they're also opening up the market for products, but at the same time maintaining the balance between sophistication. So there are some new products which they are introducing in the market, but at the same time they're mindful, and any company whose net worth of below 500 crore would not have access to this new product. But in case you fall above that, you can have much more access to new products. In the interest of time, I will just stop over here. We'll have a Q&A session at the end of the session, and if you have anything about macro hedging or other things, we can take those questions at the end. Now, I would like to introduce and invite Elizabeth Master. She is the Associate Director on CRISIL Research, who will take us through the main presentation on the IT and ITeS sector. Over to you, Elizabeth. Thank you.
Yeah, thank you, Manoj, and a very good morning to everyone. The entire presentation is structured into essentially two parts. The first part where we will focus on what has happened what are the kind of opportunities that will be there in the near term. And the second part of the presentation where I'll be focusing on really what the next decade beckons. So before I move on, let's really see that how the evolution of the IT sector has moved. It has moved right from the cost arbitrage tool, where it was more viewed as a low back-end kind of a thing, to the collaboration, which was more of a project-based thing, to the value addition, which was the end-to-end service, to the digital era. We have seen the share of digital in the ITeS, which has clearly expanded from a 10% in the last few years to almost 25% currently. Clearly, the IT sector has sustained the multi-decadal business transformation. If we look at the graph here, it represents the growth curve of the revenues in dollar billions. That's the constant currency of both IT services and ITeS. Clearly, it has remained in the positive terrain over all the years. Moreover, it has been resilient even in the times when there is a financial crisis, or be it the taper tantrum or the demonetization and GST. It clearly implies that all the growth numbers have gone to even the pre-COVID levels. In the pre-event levels. For instance, in FY19 and 20, the IT services and ITeS sector has witnessed a growth of 6 to 6.5%. Clearly, it means that there is a relevance of the entire IT sector in the Indian economy, which is demonstrated by the fact that it contributes 8% to India's GDP, employs 4 million workforce, accounts for almost half of the commercial real estate, and accounts for 45% of the service exports. In fact, in terms of IT services and ITeS, exports account for almost 80% share. And that leads me to the next slide in terms of what is the share of India in IT services and IT enabled in the global area. If we look at the top line chart, it refers to the global spends on the IT services and ITeS, and the bottom line graph, which references the India spend on IT services and ITeS. Clearly, the India spend on the IT services and ITeS over the past decade has outpaced that of the global spend. It has grown at a decadal growth of 11% versus the global spend of 8%, which clearly highlights that the India share in the global IT services outsourcing market has increased over the past 10 fiscals from almost 46% to 65%. Interestingly to note, the India share in the global ITeS outsourcing has, however, faced challenge to increase too much of share. It has just increased from 32 to 37% over the past decade. The key reasons for this has been the stiff competition that India faces from the Philippines market in the ITeS, especially in the voice CRM market. If we see the voice CRM market, it largely requires a natural accent. And that's what Philippines market has a language orientation, and hence it is more suitable for the voice-based CRM market. Now, having looked at this overview, let's get into the segments. Let's first talk about the IT-enabled services, the ITeS. If you look at the total revenue size of the IT-enabled services, it is around $37 billion in FY20. And if we see the share of MSME in this case, it is very high. Over the past 5 years, the sector has witnessed a growth of 7% CAGR. This exactly mirrors the growth that we have seen in the GDP constant prices. Rather, if we see this in the revenue terms, the growth would be higher at around 10 to 11%, thanks to the rupee depreciation. However, if we see in FY21, we are expecting a degrowth, and we expect a 1 to 5% kind of a decline in the revenue growth in constant dollar terms. Again, this is on account of COVID, and plus, more importantly, exports contribute a larger pie in this sector, almost 90%. And if we see the 3 geographies, which is US, UK, and EU, all of them account for together around 90% share in the overall exports. All these countries have seen GDP contraction. To give an example, in US, in Q2 of 2020 itself, we have seen the GDP contracting by 32%. EU has contracted by around 12%. UK has contracted by around 20% in the quarter two. In this fiscal, all the three countries are essentially going to see the GDP contraction. However, a case in point to highlight, the Asia Pac and the Middle East are the promising geographies for the sector. For instance, in China itself, we have seen in the quarter two of 2020, the GDP growth has been positive of around 3% and hence looks like a recovery curve. However, in FY22, all the countries are going to have a brighter side, and that leads to an overall growth for the sector of 6 to 8%, leading to an overall market size of $38 to $39 billion by FY22. In the long term, we believe that the growth will be at around 6 to 7%. And let's look at what are the key verticals and the key sub-segments which will be driving this growth. If you look at on the left-hand side, the chart indicates the different verticals which are there in the IT-enabled services. Clearly, BFSI and telecom both put together around for almost 60 to 65% share. However, the growth engine for the IT-enabled services clearly is the healthcare and the retail space. If you look on the right-hand side, it highlights the sub-segments which are driving the growth in IT-enabled services. Though the share in the overall CRM and transaction is highest, both equally contributing around 40%, the growth over the next 5 fiscals will be driven by two sub-segments, knowledge and transaction. In the knowledge services, essentially robotic process analytics, or be it in transaction, which will be the finance accounting or the insurance claim, these kind of sub-segment categories will be driving the growth in this segment. If we look at CRM, there is very high presence of SMEs over here, which have into customer interaction and support comprising of call centers. The CRM space, as I highlighted earlier, is having stiff competition from the Philippines market in the voice segment. However, if the SMEs are deploying a structural shift from the traditional voice-based services and moving to the non-voice-based services, such as chatbots and all, they are the ones which will be able to benefit in this time. Now, having looked at this, let us also deep dive into the SME side of it. Here on the left-hand side, we have done the analysis in terms of the different segments for the SME, where we have collated around 150 plus companies, the SMEs which have a turnover of less than rupees 250 crore. Here also, interestingly, the analysis shows to be the same results. Knowledge and transaction, they are outpacing the revenue growth that is seen by CRM. More importantly, both these segments, knowledge and transactions, also account for a larger pie in terms of margins. They garner higher EBITDA margins versus that of the CRM space. If you look on the right-hand side, in terms of the outlook for the sector, in terms of the SME revenue growth, the FY20 growth is positive, but the margins were under a pressure. This was already the case because of the pressure that was there on the billing rate on account of stiff competition that it faces from the Philippines, as highlighted earlier. In FY20, we explained earlier that the revenue growth would remain tepid, and hence most of the parameters will be in red for this fiscal. Now let's look at the next segment, which is IT services. If we look at the IT services space, it has $96 billion rupees and $billion, and the MSME share is medium to low. Over the past 5 fiscals, again, this sector has grown at a CAGR of 7%, which is exactly mirroring the growth of the GDP in cost and prices. In revenue terms, again, it's around 10 to 11% growth because of rupee depreciation. Quite interesting to note in FY21, we are not seeing a degrowth, but we are seeing 0 to 2% positive growth for the sector. This is clearly reflected even in the Q1 results of IT services, which has been quite promising. If we see in FY22, again, the growth will be having a step-up kind of a growth of 6 to 8%, driven by the brighter side of each of the regions which I had highlighted earlier. A more important thing I would like to draw attention on the right bottom chart. If we see BFSI and telecom, both these verticals which are matured and account for 60-65% of the overall share, we have seen interesting observations where the tech spend for BFSI and telecom have been higher than the revenue growth, clearly highlighting the importance of telecom spend, the technology spend. For instance, in the BFSI, the revenue growth is -1% versus the tech spend, which is at 5%. In the long term, we expect the growth to be 6 to 8% CAGR. And let's again deep dive into the key reasons in terms of verticals as well as the subsegments. If we look on the left-hand side, this again mirrors the similar kind of a thing that we saw in the IT-enabled space, where healthcare and retail segment, both of this, will be contributing the bulk and will be driving the revenue for the sector. Usually, BFSI constitutes the largest share of 50%, and they will garner higher margins for the SME space. If you look at the right graph, clearly traditional accounts for a larger pie, almost 70%. But digital has been the growing sub-segment. Especially in terms of the revenue CAGR, we expect digital to outpace the growth by traditional. The SMEs especially focused on the digital via the increased adoption of cloud, artificial intelligence, and analytics are the ones which will be well placed in this segment. Also, let's look at the SMEs into the space. If you look on the left-hand side, here again we have done an analysis of the SMEs which have around 300 plus entities and a turnover of less than 250 crore. In this, we have done it on two parameters, which is the revenue CAGR and the EBITDA margins. Clearly, the custom application development and consulting will be the highest performers. They have outpaced both in terms of the revenue CAGR as well as it has higher EBITDA margins versus the system integration and testing subsegment. So the SMEs which are into custom application development and consulting will be actually the better performers. If we look on the right-hand side table, the IT services, the revenue growth in FY20 was again positive. In FY21 as well, we have seen a kind of a flattish kind of a growth for the sector. But the margins will still remain under pressure on account of some rise in the employee cost due to the H-1B visa cost. Now, having looked at all these opportunities in the near term, let us now deep dive into really what is the next decade that beckons and what are the medium to long-term kind of opportunities that are there for the SMEs in the IT and ITeS space. Clearly, India is on the move of getting more digital, and with that, there is a next wave of growth, and there are a plethora of opportunities for the players in this space. For instance, the Digital India initiative by government, or the cloud computing, the Saas, or the new age technologies, the robotic process automation, or be it artificial intelligence and more, and the data centers and many more. So let's look at each of this as we progress. The Digital India is a recent initiative which is being done by the government. If we see the budget allocations which are done in the Digital India, it is clearly doubled over the past few fiscals. Interestingly, the utilizations have hovered at around more than 90%, which is highest among most of the ministries that we have seen where the allocations are and the utilizations have happened. However, though the number looks to be an increase of double, similarly the utilization looks to be high. If we look at the bottom graph, it indicates that India's pie in the digital share is still very, very low at less than 2%. A lot of other economies which are still far ahead in the digital space, and their US and developed countries are around 20 to 25% plus. If we break down the FY21 budgeted spend into the different sub-segments that would be there where the spend will go in, the first lot is the electronic space, which accounts for 35% of the budget spend. Electronics clearly is moving from being an assembling to more of a manufacturing step, and that's where there is a play. Similarly, if we see the PM Disha kind of a thing, it's a more of a digital initiative which is done of having digital education for the rural people. Similarly, the promotion of digital payment is a direction in the right move of having a cashless economy. All of this holds opportunities for the players in the set. Let's more deep dive in the Digital India initiatives. Now, the Digital India initiatives really span across various sectors, be it the early harvest program in the agriculture, or be it the e-governance thing, which is for the government side, or be it the National Digital Health Mission, which is more from the healthcare side, and many more. If you look at the early harvest program in the M-Kisan portal itself, we have clearly seen that almost 5 crore farmers have already registered. Similarly, the e-commerce, the My Government and Umang kind of portals, there are 95 lakh registrations already happened. The IT for Jobs, which is a skill and setup BPO, more than 50,000 people have already employed under the scheme. Clearly implies opportunities for all the players across space and across segments, be it in application development or call center or testing or incentives for setting up the BPO. Let me talk also about the National Digital Health Mission. On account of the current pandemic, healthcare has clearly gained a lot of importance. If you see your health ID, that's one of the first pointers in the National Digital Health Mission. Health ID is something like where replica of like an Aadhaar card, but over here in Health ID, there'll be more of parameters of a particular person of the health records which will be captured in. A DG doctor, which is there's no need for a visit to a hospital, but you get it online. A health facility registry, which really captures all the information about the private and the public establishments in the health space, which is available on the digital side. The personal health records, which really capture the information of a patient's history. All of these first 4 are the pilots in the National Digital Health Mission, which is already being rolled out and hold opportunities. And there are many more which are in process. For instance, the e-pharmacy and the telemedicine. The e-pharmacy also provides the online kind of a thing for the medicines, such as the Amazon's likes which are there. So having looked at the digital initiative as a first opportunity, let's look at a few more. In terms of another opportunity which is there for the ITeS segment for the SME, the cloud computing. If we aggregate the entire global spend that's there and the entire cloud computing market, it accounts for almost $300+ billion by 2022. Clearly, it's growing at a double-digit kind of a growth rate. Interestingly, Saas accounts for a very large pie of around 40% in this. And moreover, SMEs have more of a play in the Saas market. If we see the India spend, which is there, the amount is very low currently, but however, there is an exponential growth which we are even seeing in India spend on the cloud adoption, and it's set to grow at around 35% by FY22. If you look on the right-hand side, we are highlighting the cloud adoption levels across different verticals. Clearly, they are very high for the sectors which are into IT, ITeS, e-commerce and media. But the segments which will be into verticals which are into government or BFSI will actually have no kind of cloud adoption. And that's basically because of the regulated setup of these sectors. Let's look at more opportunities now. In terms of next being the robotic process automation. If we look at the global robotic process automation market size, it stands at around $1,000 billion in FY20. It's grown at a CAGR of 40%, and we estimate that it will continue to grow at this pace going forward. The RPA adoption is set to increase primarily on account of the improved productivity and a cost savings. Let me give you an example of a banking client who has actually used this RPA to automate the entire account process opening. It has actually helped them increase their revenue by almost 5 times. Moreover, they reduced the account opening time to 3 minutes from 12 minutes. And it has also reduced their resource cost by 25%. clearly it highlights that RPA has resulted into improved productivity and cost savings. If we look at the different legs of the RPA 1, 2, 3, 4, India is currently at the 2 part, which has more of server development, end-to-end task automation, and the scalable virtual workflows. In terms of the technology advancement, we believe that partnerships between the technology and service providers will be the way forward for the SME players in this space. Now let's look at the next opportunity. Artificial intelligence. Again, the global AI spending set at around $80 to $90 billion by 22, clearly growing at again a strong double-digit growth of 35%. AI, if we see on a global space, it is largely adopted well and has a higher adoption, especially in countries like USA. It is also in those verticals, for instance, in BFSI, where it is used for fraud detection or credit underwriting, or for instance, even in the healthcare segment. If we look at what kind of opportunities does AI have for the SME players especially, for that, let's look at the value chain analysis on the left side. In terms of data capture, cleaning of data, which is more of a near-term kind of an opportunity, this is for the SME players largely. Similarly, on the right side, on the top end of the value chain, which is the testing of model of new data, will be more of an opportunity for SMEs in the near to medium term. Let's also look at some examples in terms of entities that have actually deployed AI. If we look at TCS, they have an AI-based automation platform, which is Ignio. That helps to manage their IT and business operations. We have seen $100 million run rate with 300 to 500 employees as of FY20. Let's look now at the next opportunity for the sector, the data center. If you look at data center, it is sized at around $1.2 billion in FY20. Clearly, in the past few years, it has grown at around 50%, and it is expected to grow at 25 to 30% over the next 5 years. This is on account of, or it will be backed by, the increased internet penetration with low data rates, as well as, more importantly, the localization norms which are inculcated by the regulators and the government, which is going to provide a significant boost to the data center. If you look at the left bottom, data center has clearly transitioned from the captive to co-location to IaaS-based offerings. Almost 3/4 currently of the entire data center is clubbed into captive and co-location. However, we estimate that IaaS will pick up and it will garner a share of around 40% in the next 5 years. If you look on the right-hand side, again, let's look at the IaaS adoption rate into various verticals. The IT-enabled services, e-commerce and media, all these different verticals are essentially going to have a higher IaaS adoption rate. But in terms of government and BFSI, both these verticals will have lower adoption rates, and that's largely on account of the regulatory nature of this entire sector. The opportunities really don't stop here. They are endless, and there are many more. For instance, even the global captive centers, or be it even the STPI, which is by the government. And hence, it also is evident from the investments that we have really seen in the IT and the IT-enabled space. For instance, if we see the private equity investments that have happened in the IT-enabled services, in calendar year 19, it stands at around $12 billion. And if we compare these investments with respect to all the investments that have happened across all the industries in India, IT and ITES investment stands at almost 1/3 of the entire pie. Similarly, in terms of the number of VC deals that have happened, there are 370 plus VC deals that have happened in this space. And that clearly is more than 60% of all the VC deals that have happened for all the sectors in India. In terms of the AI startup funding as well, we are seeing $760 billion plus of AI startup funding that has happened. And clearly that has also grown at more than 40% on a YOY basis. If we look at, to summarize the entire presentation, we spoke about the near-term opportunities that are there for IT, ITES, SME players, essentially in the ITES space where they need to concentrate more on the knowledge and the transaction-based services, as well as in the CRM non-voice-based segment, which is the chatbot. And in the IT services space, essentially, the small SME players need to concentrate more on the digital space by having the increased cloud computing as well as artificial intelligence and analytics. Also, we looked at what really a plethora of opportunities which lies for the next decade, be it in terms of the artificial intelligence, the analytics, the robotic process automation, and more importantly, the Digital India initiative by the government, which opens up a Pandora box. With this, I conclude my presentation, and now I will hand it over to Subhash for moderating the Q&A. Thank you, everyone.
Thank you, Elizabeth, for taking us through the eras, through the years on how the IT and ITES industry has come out. I've already got a few questions for you, and I will not spend more time, and I will get straight to them. I would like to remind everyone there is a Q&A option at the bottom of your screens, whether you're on your phones or your PCs. You can use this to ask questions to Elizabeth or to Manoj, who took us through the macroeconomic forex view at the start of the session. So, first question. I would like to understand the government support for the sector, given that there's quite a few initiatives for SME startup. I know you mentioned Digital India a lot, Elizabeth, but is there anything specifically there beyond this for IT and ITES companies?
Yeah, so I think Digital India initiative itself is, having various facets. For instance, as I highlighted over there, it's not just spanning on just one particular sector, but it ranges from your agri to your healthcare. And, given the current, especially the pandemic times, healthcare definitely is the most promising space. So in that terms, the DG government, which I highlighted to you, or in terms of the national, the health ID, which is being there, these are the kind of, opportunities really which are there for play or on the government side. That's at the same time, there's a lot of government support or government direction also into that, because they also want to move to the cashless kind of an economy to have more of the digital payment kind of thing. So all in all, I think it captures most of the opportunities which are there from the digital side, as well as there's also support which is given by the government, be it in terms of the STPIs which is being there. So it's a culmination of a lot of it put together.
Okay, thanks. I'll move on to my next question is, how do you see the gig economy impact the large IT service providers? Is there any way we can see both of them converge where they could have things that could help each other? Elizabeth, should I repeat that? We are not able to hear you. Ladies and gentlemen, we're just going to give Elizabeth a minute to get back on. There seems to be a slight issue. Apologies for that.
Yeah, sorry, am I audible?
Yes, Elizabeth, you're back. Thank you.
Yeah.
So
I was mentioning that.
Yeah,
I think I heard you where you were mentioning in terms of the gig economy as to how it will impact the large IT service providers.
Correct.
Yeah. So, gig economy or the shared economy, whatever name that you call it as, or the contingent economy, as you say, it has actually led to a growth of a lot of on-demand kind of services, be it in terms of Uber or the Air PNB, and all of this is actually, going to increasingly have an impact on the global workforce. Interestingly, the gig workers are also those that work on a contingent basis, meaning having more of consulting, the freelancing kind of a thing, and temporary. So it's again a culmination of all this, which is going to lead to a pep up in the demand.
Okay. Now I'll move on to my next question, which is on VR and AR. Do you have any data on the opportunities that are there specifically for these two sectors, the VR and AR sectors?
No, sorry, we don't cover that VR and AR in this.
Okay, no thanks. No problem. I'll move on to my next question, which is, what do you think is the impact of automation technologies on RPA and jobs and economy in general?
Yeah, I think that's a very interesting question that, typically is there in the minds of many that, because of artificial intelligence or RPA, what kind of, opportunities it throws, but plus at the same time, what is the kind of impact really that has on the jobs. So the first part of opportunities is what I clearly highlighted earlier, where I mentioned that, it really leads to more of having the optimization and leading to even the margin improvement. So that's really the brighter side of it, if I talk about. Highlighting to about the jobs thing. So if I may bucket that into, two, three pointers. For instance, if it is a low skill kind of a work, or a medium kind of a work, or the high end kind of a work. Clearly, I think the low end kind of a work will see a kind of an impact. It is more to have a medium and a high skill kind of a work, which will really not see an impact because of AI and RPA. I think ITES sector, essentially, the jobs are such which definitely needs to have a lot of reskilling, and that's why we see a lot of IT companies also doing reskilling of the employees, which is quite an inherent nature of this industry for not just surviving but for growing, faster. I would also like to highlight that if I also touched upon that how the sector has gone in the multi-decadal transformation. So earlier also, the time when the IT services space really moved in from a time of having a cost arbitrage, which was only a low back-end kind of a service, and then clearly moved up the scale. So in order to sustain these kind of transformations and now to get into the digital part of getting into more into AI or into RPA, it is essential that there has to be reskilling and upskilling of the labor force. And that should be essentially the way going forward for any of the economy, which is also moving up in the developing space.
Okay, that's a really nice comprehensive question. I've got a good one here, which is, can we understand the digital adoption and digital transformation market, and how is it panning for opportunities, especially for MSMEs?
Yeah. So, in terms of the digital adoption which is there, so again, the digital adoption can range in from different aspects for the SME space. So, one of the things which I highlighted on the digital aspect, for instance, the AI or the RPA, once again, which I spoke about, I think all of it, there is a role to play even for the SMEs. For instance, I also mentioned about the value chain analysis. So even in the low end kind of a value chain, which can be simple things like a cleaning of data from there to even going on to having a kind of a model being created to the high end kind of a value chain. Clearly, SMEs have a role to play in that digital adoption. Similarly, if I highlight in terms of the cloud computing kind of a market, there also the digital adoption, if we see in there as well, the Saas has grown at a double-digit growth rate of around 16-17%, and that also holds promising things. A lot of SMEs currently which are into the Saas place. So all in all, I think plethora of opportunities again that galore for the SMEs in this space.
Great, thanks. I'm going to move on to an HSBC question here for Vaibhav. Vaibhav, how do you see the bank's role evolving in partnering and facilitating growth requirements, especially for the ITES sector?
Well, thank you for this question. Very interesting one. I see a couple of areas where banks can facilitate in terms of business opportunities for ITES sector. One is obviously in terms of forex management. One thing which is very important for especially for ITES companies is they deal with both on the largely on the export side and some on the import side. They need a good partner who can give a good advice and solutions on forex management, and especially in these uncertain conditions where you don't know how your forex movement will happen, and from a transparent perspective. So I think that's something which is very important from a bank's perspective. Also, what we have seen from our experience is that a lot of IT companies have a model where there is a holding or a subsidiary company based outside India in various geographies, whether it be US, Singapore, UK, or other large markets, and where you need one bank which can help across both the sides. And I think there we have seen some good, advantage for IT companies in terms of dealing with one bank. And I think a lot of opportunities, which a global multinational bank can provide us in terms of giving what's happening around the global markets and all those things. And also one thing which we have now, seen is digitization of transactions and handling of import-export documents. So I think overall, what is happening is a lot more technology plays coming, a lot more forex management plays coming, a lot more international banking. And I think if this is a good combination, which I'm sure a lot of IT companies would look for.
Sure. Thanks, Vaibhav. Back to you, Elizabeth. What are your future growth prospects for the mid-size IT companies, which is 50 to 200 crores top line for the next 2-3 years? Where do you think they have their tailwinds and opportunities?
Yeah, so before I really move on to that part, let me also highlight, because you mentioned about how the mid cap or the mid-tier kind of companies would have a performance. I think I would like to mention that we did an analysis of the Q1 results of FY21 for the IT services pack, and we saw that again bucketed into tier 1 kind of companies and the mid-tier kind of companies. We have still seen that yes, there were pressures in terms of revenue growth, but compared to overall economy, all the other sectors which were there, IT services definitely fared well, which I mentioned. And if I bucket it separately for IT, for tier 1 and mid caps have slightly grown. The degrowth is slightly lower compared to that which we would have seen for a tier 1 kind of a segment. So clearly, mid caps do have better performance. Number one, we have seen. The second part, which you asked me in terms of that, what are the kind of opportunities that are there for the mid cap kind of a thing in the digital transformation? I would highlight that all the opportunities which I recently mentioned on all the space. For instance, in the SME side or the mid cap side as well, when I mentioned that the IT services which are more focused into say the customs application kind of a development or consulting, they are the ones which will be able to garner a higher revenue growth rate. Plus, at the same time, the margin profile is also going to be quite stronger in that perspective. So, players which will be into that of digital era, they in the mid cap space will be able to perform better.
Sure. I think we have time for one more question, Elizabeth. I'll quickly move on to that one. So, India today enjoys the lowest per gigabyte price from a telephony perspective. Is this a great opportunity that Indian MSMEs can take advantage of in the next 3 to 5 years? If yes, how?
Yeah, so as I also was highlighting earlier that it's not just an opportunity for a particular space or a particular segment. The entire IT and the digital space has opportunities across different sectors, be it in terms of the telecom or the agri part, health, across all of them. So one of the interesting things which are highlighted even in terms of the data center, that the increased internet penetration or the low data usage, these kind of things will actually have kind of an impetus for the sector and will lead to a growth of around 25 to 30% over the next 5 years. So clearly that opens up kind of opportunities for the SMEs in the space.
Okay, thanks. Now I think we got one time for one more question for Manoj for this one. Manoj, what approach should IT companies, especially captives, adopt to protect against adverse market or FX movements?
Sure. So I think a very interesting question, given the kind of movement currency is clearly seen not only for dollar rupee but for all the other global currencies as well. So my simple take on that is you can never predict currency where it goes, but what you'd like to have is certainty of cash flow. And again, I think putting all eggs in one basket is not the right strategy. So my simple take will be one should look for some hedge strategy. And as I mentioned earlier, a lot of things are changing on the hedging regime, and there'll be much more flexibility on what you can hedge and how you can hedge. So the simple idea will be, and especially from an IT perspective, if you're an exporter, it gets paid to hedge, because there is a natural carry, there is a natural forward premium which comes around. So it's a good strategy is to, hedge using some exposure and leaving some part open to see for potential market movement. So what I suggest is maybe I think our FX team would be more than happy to engage with our respective customers to go a bit deeper into situation what makes sense for them, and we can have much more detailed conversation on one-to-one basis as the case may be subsequently.
Sure. Thanks a lot, Manoj. And with that, ladies and gentlemen, thank you so much. Thank you so much to Manoj, Vaibhav, and Elizabeth for taking us through this journey. It's been an excellent presentation, and we've got a lot of insights on the IT and ITeS sector. To all the people who have attended today, I would first like to draw your attention to the poll that will come to your screens. Please help us improving this session. It's just 3 simple questions that will help us improve our future sessions. Please also note that the session presentation, a 1-pager charticle or infographic on the presentation, a 5-minute podcast which encapsulates Elizabeth's presentation, and the full replay will all be shared with all the registered participants of today. I would like to repeat that the session presentation, a 1-pager infographic on the presentation, a 5-minute shortened version of today's session, and the entire replay of today's session will all be shared with all registered participants through your email IDs which you registered with. May I now invite Isha Chaudhary, Director CRISIL Research, to give us our closing notes. Thank you.
Yeah, thanks, Subhash. So to conclude, clearly growth in global as well as domestic IT spend is expected to be under pressure in 2020, driven by the pandemic situation that we are in. But it also presents an opportunity to IT players to innovate and step up for sure. Further, the coming decade holds plethora of opportunities, be it on the cloud side or the data centers or AI, which shall not only provide growth opportunities from export markets, but also back home where Digital India is a key agenda as well as need of the hour. With this, we would like to conclude our session. Thank you all for attending.
Thank you, everyone. Stay safe, stay connected, and please do feel free to reach out to us at HSBC on how we can work together and how we can chart your growth path for the future. Thank you, and have a great weekend.